You know, every time a company releases its financial report, it's telling a story about its wins, its struggles, and hopefully its profits. But here's the catch with stories. They're not always 100% true. So today, let's dive into how you can become a financial detective and spot the fiction hiding between the lines. I mean, just think about that for a second. What if a company you really admire, maybe one you've invested in, is building its entire reputation on a foundation of made-up numbers? It's a pretty unsettling thought, right? Well, today we're going to unpack the playbook for exactly this kind of deception so you can tell a real success story from a really well-crafted lie. Okay, so before we can spot a lie, you first have to understand how the story is supposed to be told. See, the income statement has a very clear logical narrative, and understanding that structure is step one in finding the plot holes. Honestly, you can think of it like a movie plot. The whole story kicks off with revenue. That's the hero's main goal, right? The total sales. Then, boom, the first obstacle, the cost of goods sold, what it directly costs to make the stuff you sell. After that, you've got the ongoing struggle of operating expenses, marketing, R&D, all that jazz. And the dramatic conclusion? That's net income. It's the final number that tells you if our hero actually won. Now, this is where it gets really interesting. That perfect story we just walked through, it can be twisted and manipulated at every single one of those key plot points. There are basically three core games that companies play to bend the narrative in their favor, and we are going to break down every single one. First up, you've got the gross profit game. This one happens right at the beginning of the story. An honest company, they record a sale when it's actually done, when the product is in the customer's hands. But a deceptive company, they might just invent sales out of thin air. Or they'll do something called channel stuffing, which is basically forcing a ton of extra product onto their distributors right before the quarter ends, just so they can book that revenue early. It makes the company look way more successful than it actually is. The next trick is the operating profit game. And this is where companies get really sneaky about hiding their day-to-day costs. So instead of recording a normal business expense, like paying for a big marketing campaign, they might try to hide it by calling it a one-time charge, making it seem like it's not part of the regular business. Even worse, they might capitalize it. That means they turn a cost that should hurt their profits right now into an asset on their books so they can bleed it out slowly over years. The bottom line is, it makes their core business look way more profitable than it really is. And finally, we get to the bottom line bluff, all the little tricks used to juice that final grand finale number. This could be anything from creating cookie jar reserves. Basically, they overstate their costs in good years to create a slush fund they can dip into during bad years to smooth things out, all the way to super aggressive tax schemes. But the number one red flag, the absolute biggest tell of all, it's when a company reports these amazing, soaring profits, but isn't actually generating any cash. Always remember, profit is an opinion, but cash is a fact. All right, so this stuff doesn't just happen in a textbook. These deceptions show up in the real world. And what's wild is that different industries tend to have their own favorite tricks. And this table just illustrates that perfectly. A tech company might try to capitalize its software development costs to make its R&D look cheaper. A retailer, like we said, might stuff its channels right before the end of a quarter to hit a sales target. An energy company could overstate its oil reserves to lower its current expenses. And a real estate firm might call a routine paint job a property improvement to avoid expensing it. See, every industry has its own flavor of the same lie. But here's the thing. These games can't go on forever. Eventually, the story just falls apart. And when it does, the consequences can be absolutely catastrophic. Let's look at a real-world example of what happens when the deception is finally exposed. You probably remember this headline, Luckin Coffee. This fast-growing chain in China was being hyped as the next big competitor to Starbucks. It was a Wall Street darling, telling this incredible story of meteoric growth until, well, the truth came out. $310 million. Let that sink in. That's how much of their sales in 2019 were completely fake. This wasn't just some creative accounting. This was pure fiction created by employees who were literally just inventing sales that never, ever happened. And looking back, it's so clear. All the red flags we've been talking about, they were right there in plain sight. The growth was just way too fast to be sustainable. The pressure they were under to justify all the money they'd raised was enormous. And most importantly, those massive sales numbers were not being matched by actual cash flowing into the business. The story just didn't add up. The story of Luckin Coffee is a huge wake-up call. But the good news is, you're not powerless here. You now have the tools to be a much smarter financial detective. So let's put everything we've learned into a simple, actionable kit that you can start using right away. It really boils down to these 3 simple steps. First, read the story over several years. Don't just look at one quarter. Look for weird spikes or dips that just don't make sense. Second, check the facts. And this is the big one. Compare the reported profit to the actual cash the company is generating. Are they telling the same story? If they're not moving together, you have to ask why. And finally, step 3, question everything. Dig into those footnotes, look for any changes in accounting policies, and be super skeptical of anything that's labeled a one-time item. So the next time you pick up a company's financial report, don't just read the numbers, read the story. Look for the plot holes, because now you know what to look for. The only question left is, which company's story will you investigate first?